Deepak, as I said, is CEO and founder at Capitalmind. No, I did not say that. He's invested and in the stock markets for over 20 years, and he's a SEBI-registered research analyst with a degree from NIT Surathkal. When I heard Saurabh describe the budget speech today, I was reminded of a batsman, maybe Rahul Dravid, because he talked about controlled performance, steady batting right till the end. What was your takeaway? I mean, you did not use the
I
same.
think, the budget's been, it didn't have much negative. And, honestly, this is the year for a negative budget, because you can't do much of a negative budget next year. Politically, it's the last real budget. So if they had to do really bad things, they would have done it now. I expected an increase in capital gains tax. That didn't happen, thank goodness. I expected some kind of increase in, say, an 80C kind of savings kind of thing. That didn't happen. I expected them to do more for electric vehicles. That also didn't happen so much. What I did not expect was what was not in the budget speech, which was they have reduced duties to a tremendous extent across the board. I think this is mainly because of WTO objections that may come around and their recent losses in that thing. But and also two small other things, I can discuss those later, but it's a change in focus from a farmer-based budget, which is what they do every time, to a more capex-oriented budget, which is finally good, thinking longer term. I think the numbers that are thrown out to us right now are completely hogwash. And I won't mince my words with this, because they did that the last time. The last time I said the same thing. There is no way you're going to keep, you're going to get such less revenue and keep expenditure so low. So it's exactly what happened. They made 15% or 20% more expenditure and 20% more revenue as well. So I think all these numbers today that we're getting from the budget speech itself is like way too low compared to what we'll actually get. But yeah, it's a little disappointing in terms of no innovative means of financing.
So Deepak, who's the batsman, if any, or bowler that comes to mind if you were to describe this?
Well, I'm thinking of a budget that wants to underpromise and overdeliver. Okay, so I don't know of a sportsman like that, but they either always. You choose the sportsman. I'm terrible at this.
Okay. Anyway, you've set the parameters. You've set the parameters. Let me start off with you, Deepak, and you've already given us the overview. I think you've indicated what your concerns were. Can we go a little further and walk us through what top of mind in terms of hits and misses?
Hi. Yeah. So, overall, we've had a bunch of hits. I think crypto tax was good. It helps me, so I'm quite happy, because you as a fund manager, you get compared to how are you doing with respect to crypto kind of thing. So little Schadenfreude there, but it's like it's not necessarily just that. It's also that it provides some level of clarity in how the government's thinking of whether it wants to ban it or not. Now, it effectively means if you do 100 round-trip transactions, they keep all your money, because you're going to pay 100% 1% per transaction effectively in TDS. And that's kind of going to, not to keep all your money. Of course, you're going to you can claim it back as tax, but it's going to be paid. So it's going to reduce the fluctuations and perhaps remove some of the extreme leverage concepts of this part of the business out of India. I also think from a perspective of tax cleanups, they've removed the bonus stripping loophole. Again, not very great for us, because as for asset managers, there was one loophole that you could use, but I think it provides for a cleaner tax experience overall. They've rationalized long-term capital gains tax, which is also, I think, a good thing. In terms of expenditure, they've changed the nature of expenditure. They haven't reduced what they'll spend on, but they've changed what they'll spend on. They're spending less, much less, 30% lesser on food subsidies in the next year, and spending considerably more on roads. So that's a good thing. They're spending more on the fertilizer subsidy, which is a little bothersome, but they've at the same time reduced the import duties of fertilizers. So they've given some relief there. They've reduced import costs of a lot of things, including textiles across the board. I think yarn producers have been complaining that yarn costs in India have gone up and the import duties were quite high. So apart, they've kind of rationalized that downwards as well. I think if I were to sum this up, I think the aim of this budget is in some way to reduce inflation. And perhaps, like Saurabh said, if they focus a little bit less on the amount of subsidies they're giving food, which was crossing 2 lakh, it's crossed 2,80,000 crores last year. Now the budget is only 2 lakh crores. I think moving that to roads is a much better thing, even for the villages. And I hope, I know it's going to be a non-event, because almost all policy announcements of any major impact no longer happen in the budget. They actually cut corporate taxes in a non-budget call. So don't think budget as an event is as meaningful anymore.
Yeah, which is good, I guess, and what most of us have been clamoring for in any case. But can I get an overview from you on what you've taken away in a more fine printish way, and then maybe we can pick up a couple of questions.
Yeah, sure. I mean, I think I've discussed this, but let me go through if I went through the budget documents in terms of spend, I have been complaining for the longest time that we spend too much money buying excess food from farmers. And it's not a very popular view, as you can imagine. So I'm kind of happy that the amount of food subsidy we're doing next year is going to be lesser. I expect food inflation to be a problem. So in the sense, because of the lower prices of 2021, we're going to have some kind of an issue with food prices at some point. So having too little, having a relatively controlled amount in food subsidy there is a good thing. We are, however, we've upped the spend on education and health very microscopically. But the last 2 years have been
0.82% or something.
Yeah. I mean, really, we've denied.
It's very low.
Horrible. And, we've denied our kids in education. And this is India's kids, right? So it's not just rich people, it's also everybody. 2 years, a lot of them have lost 2 years, and especially the economically challenged have literally nothing. They've had 2 years of nothingness that's going to hurt them in the years going forward. So we should have been spending more, even if it meant in some way making it up in some different ways. They're talking about green bonds, but I think really, if you ask me, I would accept lower interest rate if the government were to spend specifically on upping the educational standards and getting their public schools in better order. We pay an education cess already. It's 4%. It's not. It's on everything. So I think I'd have spent more on that. Bringing the bonds. We spend 9 lakh crores in interest. This is now our largest expense by far. I think double our next largest expense of defense. 9 lakh crores out of a spend of nearly 40 lakh crores. That's nearly 25% of all money spent just paying interest on the past loans. And the interest rates are high because, India doesn't want to. We have some law that says FIIs should pay tax on capital gains and on coupons. Everybody else charges in the world, I think, other than India and Argentina, I think a couple of very few countries charge capital gains to foreigners that invest in our securities. We're one of them, and we because of that may not allow us to be included in some of these global bond indices. And if that were the case, we would actually have much lower interest costs going forward, because India is a large enough country for being able to borrow. So there is going to be interest at some level if this was dollar denominated, but I think these are misses. Overall, I think, the budgets, let's just say, I'm happy it's over, because you keep thinking that they'll do something crazy. Are they going to do something crazy? And they're not doing something crazy, which is a good thing. So I'm happy for the lack of surprises, if you may. Of course, I'm also happy that we're getting to a point where some of these import and import subsidies are also evening out. We had import duties that were quite high, so supernormal profits were being seen in some companies in the market as well. Primarily because they could raise prices to a point where you didn't have foreign competition. We've also, by the way, cut import duties of wheat and maize and corn and a bunch of stuff. So I think that also is going to make a little bit of a difference to inflation if it were to pop up in food later part of this year. I'll stop there. I can keep going, but
No, that's fine. So, budgets once upon a time were seen to be as, course determining events for the market. that things would change on Feb 1st or when whichever part of the year it was. The budget happened and things would change. The course would change, the direction would change, money flows would whatever. Saurabh seems to feel that that's now no longer the case. Is this budget also now reinforcing that belief for you? And if not, why? And if so, why?
So basically, unless there was a major change in some element that could have caused, either corporate profits to go up a lot or corporate profits to go down a lot, the stock market doesn't care so much. The stock market is like literally the top 10% of companies, maybe top 100 companies in India pretty much make the stock market. Okay, so if you think about it, from a stock market perspective, all they care about is, the richest companies in India, have you helped them in some way or not? Otherwise, they're like, whatever. I mean, if you help farmers, it doesn't really trickle down unless you help the fertilizer companies and the cement companies and the steel companies and so on. Right now, there's not so much. There's a bit of help and there's a bit of negativity. And so it's kind of a balancing. But in the lack of those surprises, this is less business as usual. I think India is on a different path altogether, a very interesting path. So I think big time disruptions will happen. Our companies which are currently cement, coal, aluminium, steel, in the top 50 or top 100 will get replaced eventually by the tech companies, whether they're Indian or not, and companies that will perhaps have a different way to scale. This budget does nothing to change that. In fact, it encourages it by simply retaining the same playing field as it was earlier. I would say, I'm welcoming innovation here. There's nothing specific for innovation, which is a good thing. The government, whenever it tries to foster something, it does a really bad job of it. Almost like, you leave us alone and we'll get our act together. That's what India is. We succeed despite the government, not because of it. So I think, in that context, good budget.
Right. It sounds suspiciously like a Bangalore view, but an important view. Okay, so here's a question which almost follows from what you just said, Deepak. Jay Shah asked, as a fresh investor who starts investing tomorrow, how does he go about constructing the folio if capex cycle, housing cycle, debt cycle, leveraging plays out? Should he would have more focus on real estate, ancillaries, industrials, energy, power. However, given how Asian Paints, Pidilite are growing, but since they are valued at 70 to 80p, but earnings are not catching up, plus interest rates rising, fairly valued companies vis-a-vis expensive valuations. How does one construct the portfolio, which he comes back to that, and how to play the China plus one theme, which is a separate question.
Actually, when you play themes, I think you have to be knee deep in the knowledge of those themes in the first place. Some of these themes will last, some of them won't. China isn't a pushover, and if it were to see that India was gaining any layer of foothold on it that were detrimental to its success, they would act, and they're very, very big when they act. In fact, they're so big that, the fact is India was exporting steel to China 3 months ago, and China makes more steel, 10x more steel than India. Has the capacity to make 10x more steel than India. So there is this China plus one is almost like China plus one when China is not noticing, which is a good theme. It's like a lot of people don't notice. It's fine. But I think if you take each of these themes, you should play them by your understanding of their nature. If you understand the chemicals, pharma space, they're very good companies over there that will probably last the test of time. The problem is to figure out which, and to figure out whether you can last through any intermediate down cycles. Even though the stocks may correct 40, 50%, it's fine. Longer term, they'll still do well. But not many people have that ability to stay. So if you're betting on it theme by theme, be sure to understand what affects it. I think the real estate cycle, it makes sense to be diversified right now across themes, and to avoid the extremely expensive sectors like you mentioned, because the upside doesn't seem to be quite as much, but the downside seems to be higher. So the risk reward isn't quite there. But if I were to choose, I'd say put a little bit in the kind of sectors that you really understand. If you don't, and if you're just playing this on real estate will do well because my friend told me it'll do well kind of theme, then I would just say go across the broad indexes. Even India plus the US. Right now, you can't invest in the US so easily, but assuming that at one day they change those limits, just create a more broad-based portfolio and expect very little from your fixed deposits and your debt funds to make up for any equity losses. That's what I would say.
Okay, so if you're going to start tomorrow, think of India and the US, is what you're saying. And you can, I mean, invest in the US directly. That's pretty simple right now. And the peak, I mean, the limit per year is $250,000. Not many of us, speaking for myself, of course, can hit that. Deepak, I understand that you have to leave in a short while as well, and we will conclude soon. So tell us about how you're looking at the big numbers, the big capex number which you referred to in the at the open. And okay, maybe as Girish says that we don't know is going to disturb anything because we've got all these disinvestments happening, and maybe even privatizations if we get lucky. And the government's got this huge big spending target which is put there. So and nothing should again disturb that. So is this likely to go to plan, and if not, what should we be even worried about if so?
Well, you'd worry about weird things. If you want to worry, there are 100 things to worry about. But you'd worry about things like, oh, what if there's a war? We don't have money for a war. We don't have any patience for a war. But what happens if that happens? It just
Right.
Any level of belligerence changes things. So but here's what I think we don't know about, and that can be a positive surprise or a negative. It depends on how the system goes. I'll give you one example of this: the highways that we've built. We've empowered with FASTag. Now nearly about 80-90% of the vehicles that go on it have FASTag, automated collection, so there's no losses at the toll booth as much as they used to be. So because of this, now NHAI, which has this massive portfolio of highways, can take some of these places and say, well, you know what, we can put them into these InvITs or the infrastructure trusts and sell them, because there are lots of people abroad who would love something with a 6%, 7% guaranteed yield, almost guaranteed. It's not guaranteed, but the rough amount of vehicles that travel per day and X how much. So this kind of a yield that you're able to sell these InvITs at is now 6.5%, 7% privately. That's fantastic, because the IRRs on some of these projects have been 16%. So you can imagine the differentiation that can happen in terms of revenue that comes in by just monetizing what is just a tolled highway. And like this, the idea is, it's like it took 4 years for FASTag to happen. And suddenly they made FASTag compulsory. And the lockdowns and all that broke things down, but then they've come back into action. Everything's back in. So when you've got that infrastructure, can you do the next step, which is to sell the tollable highways and so on? Like this, there are a bunch of other things that the infrastructure is building. They haven't done much of it in ports yet. They haven't done much of it on the sea. We have the largest coastline. We've done nothing about it for 8 years. And I'm really sorry, but I expected much more of this much earlier than this. But as much as it has to be said, I think we should look at beyond the government for pushing spending. And one of the things the government doesn't do is allow decent private investment into expenditure in the smaller way. I'll give you an example. You and I can't start a company together whose only job is to invest in other companies. That's because we have to register it as an NBFC because of some Companies Act law that says more than 75% of your assets are securities, then you have to be an NBFC. Why? Why can't 4 people get together and build a company that can collectively invest in something else? And that's exactly what startup investing is about, right? Otherwise, you have to go to each person and get permission and this and that and all that stuff, which is unproductive. I think a lot of times it's the friends and family that kind of get together that want to invest in a company. I think we don't allow that. We've added another layer on taxation this time. This is very strange. I'll give you this. So in this budget, before this budget, there was a law that said if you invested in a company, let's say you invested in my company, the taxman could ask me, where did Govind get his money from? And I have to ask you, and you have to get your tax returns and give it to him. Fine. But if you gave me a loan, that was okay. I didn't have to prove your source. They've changed that in this budget to say, if you give me a loan and you're not a bank or an NBFC or a venture capital fund or regulated entity, then I should get your tax returns and find out where you got that money as well. Now, this sounds like basically what are you doing to Indian business? I mean, you want to build businesses, you want to build a lot of small businesses, and then you're going to put all these rules because the tax man is like this guy who's been given a target. He said, "Yaar, kya karu? Isne loan liya, usko pucho." It's anti that phenomenon.
This is a surprise, Deepak. No one has mentioned it till now, and now that you have, it's almost like the angel tax, right? Where if uh,
It's now the shark tax.
yeah.
I mean, you had the angel, now you're getting the sharks who give you loans. Now uska bhi leke aa, income tax return. I mean, I don't know. I should call it the shark tax.
Yeah, and the copyright is hereby awarded to you. Deepak, do you want to go first? Overview, and then one or two things that you liked and one or two things you didn't like.
Sorry, yeah. I guess I think I've done my rounds of what I didn't like, which was, I mean, I didn't like there's a bunch of things over here which I think the government didn't do. They could have done this, income tax rule. It's a very contentious rule, but I think it's fair. Remember, our mutual funds don't pay any tax when they buy and sell on the Indian markets. But a mutual fund abroad has to pay Indian capital gains tax when it trades in India. Our mutual funds, when they invest in the US, don't have to pay any US taxes. But the US mutual funds, when they invest in India, had to pay Indian taxes. This is a little incongruent, and only few countries in the world, and very little, not very big countries, do this, and we are one of them. And we should have changed that. Another thing we should perhaps, I mean, there was this cause of saying the ATC limit has been stagnant for about 10 years. We don't have a retirement concept of a retirement investment asset. So everything is this little 150,000 limit, and you put everything inside it. The US has a 401k. I would have loved a concept of a retirement account. You don't need the budget to do this. You can do this outside the budget as well. Create the concept of a retirement account, which is a tax deferred. Anything you put in today is not taxed. When you take it out, it's taxed as income, not as capital gains, so that you can take it out only when you retire. What I think I like about the budget is capex friendly. It is also, they've reduced import duties, so they've rationalized a little bit, because import duties reduction makes our exports a little more competitive, very contrary to earlier thought process. But if your import prices, duties are high, then you can't make some of the stuff that for exports, because it's not competitive. So also that they didn't change anything on the tax concepts too much, so didn't scare us with higher taxes.
Right. And investment themes from as you look ahead in coming weeks, months?
To be fair, I haven't changed my mind, except I think I like banks a little more now because they didn't create any damaging impact on the banks, though not necessarily the public sector banks. I think I like the private sector corporate oriented banks more, because I think in this capex, they will be the one that's benefit. Other than that, I think it's a little bit negative for certain chemical companies. There's some chemicals like caprolactam. It's about 20% of certain companies. So the import duties there have been removed. Paper packaging, import duties have been reduced. So these are the areas where I think there may be some, realignment, but those are cyclicals. I still like my favorites of, say, IT and tech, and that's the Bangalore phenomenon, right? It just sits inside and doesn't go away. But otherwise, I think, choose your companies, right? Choose your themes the way you know them. And I think longer term, India is going to do really well. This budget's not going to change that.
Right. And public sector banks actually did not get any mention in the budget. Right. I mean, so
no disinvestment either.
Yeah, no disinvestment either. But no money being given to support them, prop them up, and so on. So
it'll be given. It just won't be mentioned in the budget.
The budget. Okay. Okay. Anyway, so we'll stick to your original themes of banks and some of the companies or the industries that you spoke of, because I saw you reacting.
No, I'm all for it. I mean, we're all options people. Yeah, we love the concept of deferring tax. I mean, I run a company. I give every time we give our people options, we look at the tax impact on vesting, and then we're like, oh my God, or exercise. So it's just unnecessary mind space. I mean, I keep fighting, and then I'm like, why? They're like, no, it's there. You can't question why. So then I'm like, okay, maybe if they made this change, if they're willing to make this change, I would, I don't know, I would personally give the budget 2 thumbs up again. So
Okay, great. So that's an important note to end on, but in a sense, an important input into entrepreneurship and encouraging entrepreneurs to not just set up but also to distribute their the wealth creation opportunities. Thank you so much for making this evening come alive, as it were, and also setting the stage for coming months of good investing and wealth creation for everyone, I guess. Thank you so much.